This week in the parish of bourses and market structure, a happy 6th birthday to Star, strong Nasdaq, weak Tadawul, and the NSDL IPO is looming. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 306. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, the crypto-keen Senator Loomis is waking up on crypto after a historic legislative week, according to Cointelegraph, being quoted as saying, "Don't lose faith. We're waking up. President Trump has expressed his desire to make the United States the digital asset capital of the world. Help is on the way. Legislation is on the way. Rules of the road are on the way." My only problem is I'm going the other way. How can we have faith in stablecoins which can wreak havoc with credit markets, etc.? See Exchange Invest and BitCarnage issues pass them to follow my concerns, or indeed even the MSM, where the FT and the Telegraph have been running stories such as the coming crypto crisis in the FT, while the Telegraph, representing something closer to free market thinking, has added this: stablecoins, the next big financial crisis waiting to happen. If you enjoyed this excerpt, you may be interested to know that you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in exchanges, SIBO is planning to cease Japanese equity operations, having spent ages to become the most global stock platform in the world. SIBO is, it seems, already working its way back to being a more parochial entity under new CEO Craig Donoghue. I hope this is a misperception, but then again, with the SIBO management being a remarkably parochial lot, and appreciably more so after a slew of recent senior retirements, I think cutting Japan now seems like a badly timed move to simply flex cost cutting, which has always been the problem of myopia through parsimony that plagues SIBO being genuinely expansive. So, no mindset revolution so far in Chicago's biggest options market. Over on the other side of Chicago, CME Group, they've won their lawsuit that was brought by former flow traders. This lawsuit always appeared as if it had a certain Hail Mary pass quality to it. The jury clearly agreed. Readily. Happy birthday, Shanghai Star Market. It's turning 6, the SME tech platform, with $153.4 billion raised for Chinese startups. In India, Jane Street is seeking more time from SEBI to respond to the July the 3rd order on the market manipulation case. All the same, the Economic Times via MSN makes clear where it stands on the Jane Street arbitrage. Jane Street, one of the world's most sophisticated trading firms, pulled off a renminbi 36,500 crore market scam, making a whopping 43,289 crore options profits while deliberately losing 7,208 crore in futures and equities. Note that word. One of the world's sophisticated trading firms pulled off a ... market scam. Busy week for results in the parish. All the details were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at some edited highlights. Nasdaq, their results for the second quarter, impressive. Net revenue plus 13%, GAAP operating income plus 34%, GAAP diluted EPS plus 103%. Consistent growth at the higher end of the curve. Nasdaq performs once again under CEO and Chairman Adina Friedman. Deutsche Börse, on the other hand, well, what a lackluster quarter. Not the first time we've said that, probably won't be the last. It was a statement of abject, if uninspiring, mediocrity. Once upon a time, I remember Teutonic efficiency was quite the thing. Disappointment from the Saudi bourse operator as well. Profits fell 41% at Tadawul. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast. Meanwhile, in deals, two key things to think about this week. NSDL, that's India's largest depository for stocks and bonds, is heading to IPO, and unlike Euroclear, for instance, it's a dynamic, fast-growing business. The book opens just after we record this podcast, July the 30th. You'll be seeing results from that in next week's Exchange Invest, I'm sure. Meanwhile, in Athens, negotiations are taking place with bidder Euronext. Over in product news, CME Group and Nasdaq, they've extended their exclusive Nasdaq 100 futures license through 2039. That would seem to suggest Nasdaq have no ambitions to return to the futures exchange business in the near term. At the same time, over in the Philippines, they're still ironing out their GPDR rules. They're coming soon. Those GPDRs, Global Philippine Depository Receipts. In technology, good news from HKEX. Once again, their issuer access platform will be launching in 2026, enhancing issuer communication and market transparency. While the Multi-Commodity Exchange of India faces a technical glitch, it resumed trading after a halt last week. And in better news, IEX, the Flash Boys, have selected Data BP to streamline their market data business. An excellent market move for all parties, IEX having sold off their previous in-house data entity some months ago. And EuroCTP, they've submitted their EU equities consolidated tape bid. All the best to the first coherent bid, and perhaps the only one to emerge in the ESMA contest. Over in regulation, ESMA, they're preparing for the switch towards a single volume cap in October of this year, 2025. In other words, dark trading will be capped at 7%. Systematic internalization is the enemy of transparency. Frankly, block trading isn't. Single, double volume cap rules have been perplexing and confusing, and frankly, I'm not sure I follow them anymore. FASE has been, by the way, somewhat behind the ball in clarifying this opaque argument, which is disappointing. Good news for Citadel, they won their case over the SEC audit trail funding, and Republicans in the House have proposed a 7% leaner SEC budget compared to Biden's era under Chairman Gary Gensler. And finally, a snippet of great news. Hong Kong's IPO boom has set off an underwriter price war. Good news all round as listing costs are being reduced by the competition that's apparent in the SAR of Hong Kong as it enters a new golden age. In career paths, a Senate panel was forced to delay a vote on Brian Contence's nomination over the CFTC chairmanship due to a delayed GOP senator thanks to a late aeroplane. Interestingly, the appointment is attracting significant opposition due to Quintence being liberal on prediction markets and a director of Kalshi before his appointment by President Trump as chairman of the CFTC. US native Indian tribes who have some regulatory carve-outs for sportsbooks and gambling are doing a lot of the complaining. By the way, I can well remember Intrade Trade Sports even discussing regulation under the umbrella of some tribe or another, apologies to which one my memory fails me, over 25 years ago. In New Zealand, the chief executive of the last 9 years, Mark Peterson, who's made a material impact for the better at NZX and definitely improved the firm from what was a much more lackluster enterprise until James Miller became chairman just over a decade ago, has announced he will depart in April 2026. All the best to him. If only they had a CEO in Dhaka, the DSE. They've got a leadership vacuum. Both the CFO and CRO positions have been open for a month, while the MD position has remained vacant since May. Indeed, in the history of the Dhaka Stock Exchange since 1998, out of 13 MDs or CEOs, only 2 have been able to complete their term. Meanwhile, in Big World, with the UK Labour government in deep trouble after just a year of breathtaking incompetence in office, at least HRH King Charles III is doing his bit to try and grow UK commerce. King Charles has granted the right to issue a royal warrant of appointment to regular suppliers to the household of the Prince and Princess of Wales. While the Prince of Wales could readily anticipate this honour would become his, as it was his father's when heir to the throne, it's the first time since 1910 the Princess of Wales has been given the right to issue warrants in her own right. And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast number 306. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.